Hey everyone, welcome back to Corporate Decoder, the place where we make sense of the financial jargon so you don't have to this week. We are looking at Soluna Holdings Incorporated. And well, they did something interesting with their stock offerings. So what did Soluna Holdings Inc. do in September 2025? Well, they filed something called a prospectus supplement. This sounds complicated, but it's essentially an update to an earlier document filed with the Securities and Exchange Commission. Or CC, this update is about selling more of their common stock. This filing is reporting on the company Soluna Holdings Incorporated, also known as SLNH. They are involved in offering shares of their common stock. The amount they are looking to sell is quite significant, up to $87,650,000 worth of stock. This is happening under an agreement they have with a company called H.C. Wainwright & Co. LLC. Think of this as an at-the-market offering. They already have an existing agreement for this. This prospectus supplement is like adding a new chapter to an ongoing story. It is amending and adding to information that was already released in earlier prospectuses from April and even September of 2025. Every update needs to be read with the original documents, unless the new information replaces the old. This filing also mentions that Soluna Holdings Inc. has already sold a decent chunk of its stock under this same arrangement. They have sold over 13 million shares for about $12.3 million. This shows they are actively using this at the market method to raise funds. They are essentially selling their stock directly to the public over time through their chosen financial partners. When we look at what Soluna Holdings Inc. is offering, it is important to note what kind of stock they have. They have common stock, which is what most investors buy, and they also have preferred stock. The filing lists 9.0% series, a cumulative perpetual preferred stock. This is a type of stock that usually pays a fixed dividend and has priority over common stock when it comes to dividends and assets if the company were to be liquidated. The par value, which is a nominal value assigned to the stock, is very low at $0.001 per S-share for both common and preferred stock. And what exchanges are these stocks traded on? Well, their common stock under the ticker symbol SLNH and their preferred stock SLNHP are both listed on the Nasdaq Stock Market LLC. This means they are accessible to a wide range of investors. The filing also includes an opinion from a law firm called Brownstein Hyatt Farber Schreck LLP. This opinion is about the validity of the shares being offered. It is essentially the lawyers saying that the stock being sold is legally sound. Their consent to be named as experts is also included. Finally, we have the interactive data file. This is a bit more technical, but it basically means that the document is structured in a way that computers can easily read and process the financial information. It's like having the data neatly organized for analysis. Now let's get to the meat of it. What does this really mean for Soluna Holdings Inc. and its investors? This filing is all about raising capital. They are looking to sell up to $87.65 million worth of common stock. They have already raised over $12 million from previous sales under this program. This is a common strategy for companies, especially those in growth phases, to get funding for operations or expansion without taking on debt. The fact that they are using an at-the-market offering means they are selling shares gradually as market conditions allow. This can be less dilutive than a big one-time stock offering, but it also means the price they get for their shares can fluctuate. They are essentially saying, we have shares to sell, and we will sell them when it makes sense based on the current stock price. Here is the interesting part. The company is raising a significant amount of money. While raising capital is generally good, it is crucial to look at why they need it and how they plan to use it. Are they investing in new projects, paying down debt, or just covering operating expenses? Without more context from their specific business operations, which is not detailed in this particular filing, it's hard to say definitively. However, consistently needing to raise funds through stock sales can sometimes signal that the company's operations are not generating enough cash to cover its needs. Let's consider the implications. When a company sells more shares, it increases the total number of shares outstanding. This can dilute the ownership stake of existing shareholders. For example, if you owned 1% of the company before the offering, after the offering you might own slightly less than 1% if your ownership percentage is maintained by buying more shares. This dilution can also impact earnings per S-share, as the same profit is now divided among more shares. Looking at the filings, we see a date of the 23rd of September 2025 repeatedly. This is the key date for this report. It is the date they filed this prospectus supplement, and when a lot of these actions concerning their stock offering are considered to have taken place. In terms of our Warren Buffett style analysis, we always want to understand the underlying business. Soluna Holdings Inc. is a company focused on distributed energy infrastructure. They have projects related to data centers, energy storage, and renewable energy. The need to raise capital through stock sales suggests that their projects are capital intensive and they are relying on external funding to grow. We need to see if their operational projects are generating the expected returns to justify this ongoing capital raising. The risks here, as with any company raising capital this way, include market volatility. If the stock price drops significantly, they will be able to sell fewer shares or at a lower price, potentially not meeting their fundraising goals. Also, if the market perceives these stock sales as a sign of financial weakness, it could depress the stock price further, creating a negative cycle. So, what is our take on Soluna Holdings Inc.? Based on this filing, they are actively working to fund their growth and operations by selling stock. This isn't inherently bad, but it is a strategy that needs careful monitoring. Investors should pay close attention to how this new capital is deployed and whether it leads to profitable growth. The company's future direction seems to be heavily reliant on its ability to execute its energy infrastructure projects and generate strong returns to avoid excessive dilution for shareholders. The opportunity lies in the growing demand for distributed energy solutions, but the risk is in the execution and the potential for further ownership dilution if profitability does keep pace. Alright, that is our breakdown of Soluna Holdings Inc. latest filing, what is your take on these numbers and what they signal for the company? Future, drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.